Hello, in this presentation we will enter payroll for the payroll period within QuickBooks Pro 2018. If you've been working along with us, we will be continuing with the Get Great Guitar problem. If not, that is okay. We will be processing payroll within the QuickBooks Pro system. If you have the backup file up to this point, you can go to File and restore the backup file, taking us to the data set we have now, allowing us to enter information to the current employees. If not, then you can watch along and see the payroll process that we will be going through. We currently have the open windows open. If you don't have that open, you can go to the View tab, Open Window List. We also have the Home tab open here, the only open window in the open window list. That can be found at the company and home page. We're going to go through payroll, quick recap of what payroll is, how it works in QuickBooks. There's a lot of options on payroll. So remember that QuickBooks itself has at least three payroll options. Those payroll options all providing a different level of service. Oftentimes the increasing level having to do with how much of the reports they're going to fill out in terms of quarterly reports and year-end reports, as well as added reports within the QuickBooks feature in terms of reports that can be related to payroll. And then of course the states, so the more complicated we have in terms of what state we are in and how many states we have, or if we're in different countries, then of course the payroll will become more complicated given the fact that those areas are going to have different requirements. If we're in a state, for example, that only has federal taxes, well, that makes it a bit easier in terms of the reporting of the payroll taxes, or has less state regulation in terms of payroll taxes. We here are going to be working with the manual system, so that's going to be the easiest system. You can set up the manual setup if you want to look up in the prior presentation when we set that up, and just to get a practice problem, it will provide you the information, and it's almost better to practice with, because what will happen is instead of the system creating and calculating the federal income taxes, withholdings, FIT, Social Security, Medicare, we'll have to put those numbers in, and it'll look the same, but by us putting it in there, it'll help us to see what is happening in payroll. Your other option on payroll is to outsource it to something like ADP or Paychex, and if you do that, you still need to know what the journal entry is, because you're going to have to put it into the system, at least in a journal entry form, so that it's on the financial statements. And this system will help us to understand what that journal entry is and how you might read a report from ADP or Paychex, how you might integrate your systems with theirs in some way. So once you set up payroll within QuickBooks, you'll have this icon. Before you set this up, you may not have this arrow here. Once you set it up, and you can set up the free version just to practice it and then upgrade to a paid version as you would like, then you will see these items. Now we're going to pay the employees every pay period, in our case every month, but it could be bi-weekly, semi-weekly, or it could be every week. And then we're going to pay liabilities at a later time. So in this case, it's the end of February. We're going to process the payroll. We got the 2 employees that we're going to be paying for, and we're going to say pay employees. If we go through the process here, there's 2 dates we have. We got the pay employees for the period end. That should, after the first payroll period, populate automatically, because it knows that you're paying, in my case, monthly, so it's going to populate the end of the month. The paycheck date should be the date that we write to the checks, but obviously we're working a problem in a different date than the current date, and therefore I'm going to put the date as the same date, 02/28/21. So we're going to say the pay period ended, and we're writing the check at the same date. That doesn't necessarily have to be the case. We're going to take it out of our checking account. If you have another payroll account, then clearly you would be putting it into the payroll account and then taking it out of the payroll account. Print the checks? No, we're not going to print the checks. We are going to have the just enter the checks as if we were printing them in another format, and just inputting the data so that it will be there for the financials. If you were to print the checks, then you would have the checks that would be already set up that you would have to put into the printer in the right format, and then make sure the check numbers line up as they should. If they're the pre-printed and everything's been going along in the same format, that's an internal control to the paychecks. Then you can print those out as you run the payroll. We're going to select our two employees here. We've got Adam and Erica, and say continue. We will continue with this. And then what we need to do is go through here. We got the gross pay, but no taxes, no deduction, and no employer taxes. That's because we're using the manual system and we got to calculate those manually. And therefore, we're going to go through here and take a look at that. And it will be helpful to do this too, because it'll give us an idea of what's going on rather than just processing the system and hope QuickBooks, magically does everything correctly. We can have some idea of what QuickBooks is doing here. So we've got the salaries. We've got the $4,583. That's going to be the gross pay. That's what this employee has earned, Adam. And we're going to take out then the payroll taxes that need to be taken from the paycheck. These are the payroll taxes of the employee, not the employer, not ours, the employee, Adam. And we're going to take his employee taxes out. So we're going to have, I'm going to put down here, the three taxes are going to be that we're going to withhold are going to be the federal income tax. This is going to be derived from the W-4 in terms of marital status. It'll be in terms of how many exemptions that are reported, and then we'll have to look that up on a table based on that and the fact that we're paying monthly. That's the table you're going to take a look at if you're paying monthly versus biweekly. So in any case, this is a bit more complicated one for us to figure out. We got to look at a table to figure that out based on the correct table, and based on marital status, and then based on how many exemptions, and we're going to get that. Now, the Social Security and Medicare is usually a bit easier because it's basically a flat tax, which means we're just going to take the gross salary and multiply it times some rate, which I believe right now in this problem is 0.062. So if we multiply the 4,000, let's just do it real quick. If we the 4583.33 times 0.062, or 6.2%. If we move the decimal place over two places, 0.062, we'll get the 284.16. So that's what we should have here. I'm going to put the negative 284.16. And then on the Medicare, if we were to calculate that out, that one should be fairly easy to calculate too, because it is a straight method. Typically, it's going to be 4583.33, that's our gross pay, times 1.45 or 0.0145. If we move the decimal two places over for percent, 0.145 or 0.0145, that will give us the 66.46. I'm going to round up, so we're going to say negative 66.46. Now, this is just an example problem, so those percentages are just to show you an idea of how the percentages would be calculated. If you want to calculate these percentages, I would talk to a professional to calculate the percentages. Make sure you have the current percentages. The point here is that the federal income tax is usually a bit more complicated because we have to use tables in order to figure that number out. The Social Security and Medicare is a little bit easier, typically because it's more of a flat rate, and therefore usually that's going to be easier to calculate. The federal income tax, if we mess up on the federal income tax, the estimate's never going to be perfect, of course, because it's just an estimate on a very complicated tax system that has a progressive rate system. So when at the end of the year, that's what happens, is you get a refund, or you owe money based on your withholdings, of course. And we're hoping that the tables are set up so that generally, if everything is set up and known within the table would result in a slight refund at the end of the year if this was the only income to that employee. But of course, in real life, there's a lot of other factors. So in any case, this one's a bit more complicated to calculate. This one's usually a bit easier. These two have to be fairly exact, however, because we don't usually get a refund or owe money at the end based on the Social Security and Medicare. It needs to be exactly the correct amount. All right, so we're going to say then we have our side of it. So that means that we have to check here. We pulled out federal income tax, Social Security, and Medicare. That's all we're going to do for this example problem. There are other employer taxes, FUTA, for example, and the state taxes that would have to be taken out depending on where we are at. These, however, will be fairly standardized, and those will be there in any area, and that'll give us a good idea of what is happening here. And then we have the employer side. On the federal taxes, we have to pay and match, in essence, the Social Security, which is 284.16. We're going to pay on our side the employer taxes. And then we have the Medicare, which we're going to match 66.46. And I'm not going to do the federal unemployment at this time. It's usually a much smaller rate, but we're not going to deal with federal unemployment because it's in some ways dependent on state unemployment, and we're not going to deal with the state stuff. So we're going to stop there. So note we have this is the salary, this is the net check, this is what we pay on that. Now we're going to do that for one other employee. So if we select tab, this employee is an hourly employee. So we're just going to enter the number of the rate in this case, which we have 20. That's what we're paying this employee. And we're saying 40 hours is what we have. Therefore, we've got the 800 here. We'll do the same calculation. The federal withholdings, we would have to look at the table based on marital status and exemptions. And we're going to just say that that's going to be 110. And then the Social Security and Medicare, we'll calculate that out this time using this rate. For an example, 800 gross pay times 6.2% or times 0.062 times 0.062, 6.2%. That'll give us 49.6. So I'm going to put that here, 49 and 60 cents. And then Medicare, we'll calculate that out. Same gross pay times 1.45 or 0.0145, 0.0145. So that's 1.45% or 0.0145. And that would give us the 11.6. So we're going to say negative 11.60. Again, I don't mean to have this completely exact, just mean to give an example of how these calculations would be calculated depending on whatever rate is currently there, and make sure to check in on that and get the correct rates. So then we're going to have to match it on our side. So we've got the Social Security that we're going to have to match on the employer side, 49.6. And then the Medicare, which is going to be 11.6. We're not going to be dealing with the federal income tax. And then I'm just going to say save and close. Populated now for our two individuals. The net check then to them, $3,512.71 and $628.80. Now, if we were trying to think about what's going to happen when we record this thing, we're going to make these two checks. The two checks will actually be written for this amount and this amount. It will also create the check stubs having all the detail on it, meaning it'll tell them what the gross pay was and what was taken out in terms of taxes and the grouping of Y, Medicare, Social Security, and federal income tax. In terms of the journal entry, we know cash will go down not by the gross pay, not by this amount, but by this amount. And we can think of the journal entry as what's going to happen in total or by paycheck. If we think about it, what happened by total, we can kind of think about it as what the minimum we would have to input into our system if a third party was to do the payroll, and then we had to enter that data so that our financial statements included that data. In other words, we see that the cash would go down by the $4,141.51, but the payroll expense was actually $5,383, the gross pay for these individuals. So the payroll expense would be this, increasing the expense. The check, however, would only be this, and then we would have to record the difference, which is the taxes that we took. That's federal income tax, Social Security, and Medicare. That would go to payroll tax liability, a payable account, which we would then need to pay out at a later time with another check that we would write for to, in this case, the IRS, for the amount owed. And then we would also have the employer portion of taxes. Here, we had to pay this Social Security and Medicare on top of what we took from the employees out of their paycheck. And that would be increasing the payroll taxes, which QuickBooks just puts in the payroll expense as well. And it would be increasing a payable as well, which QuickBooks is just going to put into the same payable that is owed to the IRS. So let's create this and we'll take a look at it. We could record this net like that. When we look at the detail in our system, we'll see that it'll be broken out not only by just that one journal entry, but by the accounts, by the number of employees, and we'll see the breakout and see how that works. So we're going to say create paychecks. There we have that. We're not going to print the checks or the check stubs. I'm just going to close this out. First, we might want to check the check register to make sure that those have been created. So we can go to the banking. We can go to use register and checking account. And there's our two checks. We can see that they are paychecks rather than just normal checks or pay bills. If we double click on it, we have to double click right on that little item where it says paycheck, by the way. Then we can see our net pay, our activity. It's all lumped together. However, if we want to see the detail, we go to paycheck detail, and that will give us our breakout of the input screen. Closing this back out, closing this back out. We can then take a look at our reports, go into the reports, go into, we're going to company and financial, scrolling down to the balance sheet. Changing the dates, up top, customize report. Date's going to be 01/01/212/31/21, and we're going to say OK. So here we have our information. Now we think the checking account went down, so we'll double check on the checking account. Scrolling down, we see our two paychecks here. If we double click on either of those, there's our information. If we want to see more detail, paycheck detail, we can see the information there. If we close out of this, close out of that, and close out of this, we are back to our balance sheet. In the most simplified format, you would think the other side of that will be on the income statement as an expense, or the profit and loss as it's called in QuickBooks. So we'll go to reports, company and financial, profit and loss standard. Changing the dates from 01/01/21 to 12/31/21, January 1st, 2021 to December 31st, 2021. We see the account payroll expenses. That's going to be the other side of this transaction. If we double click on the payroll expenses, we scroll down and we look at our two items. Now it's broken out into a lot more detail. This is going to be a little confusing when we look at the activity, because we see more than just one line item for the entire payroll that was recorded. It's broken out one by these. Looks like these are the two checks we just wrote, and we have the checks that were wrote. This is going to be for the entire amount, including gross pay, including the amount that was taken out for payroll taxes from them. So this is gross, not net. And then we included also in here, they're not breaking out, QuickBooks is not breaking out payroll taxes to another account, these being the employer portion of Social Security and the employer portion of Medicare. This being the gross pay for our second employee, the employer portion for Social Security, the employer portion for Medicare. So you can see if we have a lot of employees, this detail can be a bit confusing. When we think of it as an aggregate, then we would enter it just basically as one line item, which means that we would just have one line item for the entire payroll. And so you can think about it on aggregate, the entire payroll, posting it with one journal entry, just combining all of it together, or looking at the detail, which we're seeing here in the transaction report, breaking out this information by employee. We can look at more detail here. If we double click on any of these, we see the check and we see the check amount. This is the gross pay, not the amount that the check was written for, not the net amount of the check. If we want to see the detail, then we see that the difference then, of course, is the employee portion of Social Security, Medicare, and their federal income taxes. So when we record payroll expense, we record it at gross, even though we took out their taxes here, because we then need to pay the government, in this case the IRS, for their taxes. And then we record our side, Social Security and Medicare. So what we see in the detail is the gross pay, 4583.33, and then our portion, Social Security and Medicare, not breaking out their portion of Social Security and Medicare, because that's just part of the employee's payroll expense. So if we close that back out and close this back out, that's what we see here. We see the gross pay, our Social Security, and our Medicare. If we see the second payroll check, same thing. We see the gross pay here, not the net pay. Detail, we're seeing the gross pay, 800, not pulling out their Social Security and Medicare, and then separating our portion of Social Security and Medicare, the employer portion. and that's what we see. So we see the 800 and then this 4960 and this 1160 in the detail. Let's close this back out. Close this back out. There's the 800. There's our employer portion of the 4960, employer portion of the 1160. Closing that back out. The other side of this will be back on the balance sheet. If we go into the balance sheet, we see that we have a payroll liability. Scrolling down to the liabilities, payroll liability here. If we double click on that, we can see the detail. And again, it's breaking out all the detail here. If we look at this last check, we've got the 1110, looks like the FIT, federal income tax, and then the Social Security for the employee, the Social Security for the employer, the Medicare for the employee, the Medicare for the employer. So when we're thinking about the total taxes we owe in terms of payroll tax expense, it's breaking out by line item and by paycheck within the transaction detail. So once again, this is one employee, and we're saying there's 110 that we owe to the federal government in this case for federal income taxes that we took out of their paycheck. We owe $49.60 for the Social Security that we took out of the paycheck that we got to write a check to the government for. We owe $49.60 for the Social Security that we owe based on their wages for the employer side. And then we have an $11.60 for Medicare that we took out of the employee's paycheck that we owe to the government. And we have the $11.60 that we owe based on the employee's wages, the employer portion. If we double click on any of these, we're going to go to the pay check here again. We don't see the paycheck amount, the net pay or the gross pay. We see this activity being broken out here, the taxes, what is owed in terms of taxes. So if we look at the detail, what we see in the accounts payable is the 110, what we owe for federal income taxes that we took out of the employee's paycheck, the 49.60 that we took out of the employee paycheck for Social Security, the 11.60 that we took out of the employee paycheck for Medicare, and then our portion of the 49.60 that we owe, and our portion of the 11.60 for Medicare that we owe. So if we close this back out once again, there's the federal income tax, there's the employee portion of Social Security, the employer portion of Social Security, the employee portion of Medicare, the employer portion of Medicare, broken out by, in this case, one paycheck. Same information would be up here for the second paycheck. And if we had more than 2 employees, you can see that this would be a detailed transaction by account report.